right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you to the Morning Edge, and we're going to start. We're going to start with our analysis process. So, as we always do at this time of the day, yes, we will be doing live NFP analysis. So, as it's happening, and personally, aside from my small dollar Swiss position, which is small now. I'm just kind of sitting in it, and I'm not going to be probably doing a whole lot. We're going to have to see some pretty. We're going to have to see some pretty big moves in the FX market for me to get involved today, especially after a day like yesterday. But let's talk about what that'll look like, and let's talk about the euro dollar. So obviously, if you missed the earlier conversation that we had, I really believe that the euro dollar, the move we saw yesterday was a result. Well, it's a result of a couple of things. Obviously, it was a result of the Fed, or excuse me, of the ECB not meeting expectations of the market. The market had expected something, the ECB did not deliver on those expectations, so you got to move higher. But I think that the strength of the move, okay, the strength of the move and the length of the move was basically due. It was due in part to like the Financial Times tweeting that, because again, and I'm just going to state what I stated earlier. When the Financial Times released that tweet, we went from 105.50 to 106. I want to say it was about 106.35. Whoops, not way up there. Here, let me draw that again. So we went from 105.50, okay, right here, okay, to about 106.35 or so. This is ahead of the ECB decision. What that does, and I was trying to explain it earlier, that it put us then that much closer to any stops, because you have to imagine there's stops layered through the market. Here, 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 here. They get a little thinner as you move further out. They get moved, but they're big stops, are higher. They're just thinner, as you get further away from the current market, right? So after the Financial Times tweet, we moved from here to here. Then the actual news release came out, and people go, "Oh crap! Okay, that wasn't a mistake." But instead of us only moving 100 pips initially after the ECB decision, we had already moved 150 pips. We were here, where after the interest rate decision, we probably would have only been here if the Financial Times didn't screw that up. And so what happens is, instead of being here and those stops being untouched, we already started chewing through stops on the way up. Then obviously the ECB didn't make good on what the market was thinking, so we tripped all these other stops. And like I said yesterday, I'm like, well, I was thinking, okay, we're going to go to 109. We'll probably be capped here. It's a 38% retracement, right? I figure we're going to be capped around 109. I'm like, okay, I'm going to start selling on a move back up to 109. And so I started selling in like the 60s, like 108.60. All right. And then I sold a little bit more when we went above 109. And when we started tripping these, I'm like, okay, now they're just tripping the heavy, like lingering stops out there. And I start piecing two and two together. I start thinking, okay, well, again, I was saying, okay, well, we were here when the decision was made, where we should have been down here. So we probably tacked on an extra 150 pips yesterday due to that Financial Times leak, in my opinion. So that's what gave me the confidence to kind of sit in my euro short overnight. And I took a very small profit already. I got out. I was short, like cost average was around just under 109, and I covered it like 108.70 and just took a little bit of profits. I'm out of the euro. But to do like the what happened, I don't like, you guys know I don't like to do a big review of what had happened. But I think today it was important for you guys to understand why the move was 450 some odd pips or whatever the range was yesterday. I mean, we went from 105.50 to 109.82, so 430, 440 pips, whatever that move was. I think you have to understand why it happened. If the Financial Times didn't do what they did, these stops up here above 109, those probably would never have been touched. These right here. Any stops up here probably would have never been touched. If it was just, ECB decision, then the ECB, presser, we probably would have went like this. Okay, we probably would be 100 pips lower currently, I would think. Okay, so I try to explain it, and I'm going to explain one last thing before we go into the euro where we're at right now. Is the great news is, to me, for somebody who actually wants to buy the dollar following a rate hike, if we get it in December, is this move that happened squeezed out a lot of people. It leveled the playing field really good, and what happens there is that once that has happened, it is now allowed for that buy the rumor, sell the news for the dollar. As far as a rate hike goes, I don't think that that's in play anymore. So if the dollar does sell off following a rate hike, I'll be actually looking to buy the dollar then, because I think the move that happened yesterday was the move that people were looking for in 2 weeks. All right, and it squared up a lot of positions. Now, where does that leave us now? Because now we have to face where we're at currently, and so what do we do? Well, obviously we have non-farm payroll, and I think we probably come in close to inline. Now, the good news is if we come in close to inline, I think that really allows the Fed to raise rates in December. All right, if we come in worse than expected, like let's say we only create 170,000 jobs, the 110 level, stops above 110, I think are very, very vulnerable. Okay, so what I'm telling you right now is I think that any stop that is above 110 is vulnerable on a weak number. I also believe that we are flagging. Okay. Now, typically, when I look at a flag pattern, when I look at a flag pattern in the market, and my drawings may be a little off here. I'm just kind of roughly drawing it. Typically, when you have a flag pattern, you have a measured move, right? So the measured move in this case would take us a lot higher. It would take us probably closer to 113, all right? Especially if we start the move now. Here, we're looking at move up towards 113 and change, all right? That would be if the flag pattern decided to play out today, all right? If this flag pattern here, I personally don't think that flag pattern will play it the whole way out unless that we have just a god awful number, like we create 100,000 jobs. If that's the case, yeah, we're probably going to see those levels, I would think, but not necessarily today. And if you're expecting a move like this to happen today, there's not enough. The positioning is probably way squared up now. You're not going to get a move like that happening intraday. What could happen today is we could take out stops above 110. I think that's entirely possible. The one thing that we also have to note is this movement, this retracement here has been very shallow. This has only been about it's about a 26% retracement, but it's a 24% fib. Okay, very shallow retracement thus far. Whenever you get a shallow retracement, the likelihood of an upside move is high. Okay, now obviously it's non-farm payroll, so anything goes. If this was just a normal scope of a move, like let's say that we didn't have non-farm payroll today. Let's say today was just like durable goods or some second tier number that we're not really paying too much attention to. If that was the case, I'd be looking to get long the euro this morning, and I would be targeting a break above here, and I would be looking for next week up into here. But this is non-farm payroll. Non-farm payroll, like interest rate decisions, they are game changers. There are two news events that happen in the currency market that are game changers: interest rate decisions and jobs reports. Especially here in the U.S., because jobs really are, a good showing of the underlying strength strength or weakness of an economy. So we could very easily do a 50% pullback, a 618 pullback on a strong jobs number. We get a 250,000 jobs created number today, and let's say our unemployment rate comes in at 5% or maybe even 4.9%. We're going to be down here at 107 by midweek next week. I truly believe that. Okay, but for right now, we have to look at what we've got, and what we've got is we've got a flag with a very shallow retracement thus far. Okay, now for today, the 38% retracement comes in at a round number at 108. Okay, and I think 110 is going to be a hell of a number to really get a solid move above. So I would think that 110 is going to be really solid resistance, because if you trip stops above 109.80, which is the highs from yesterday, you trip stops above that, you might get enough gusto to push above 110 and maybe trip a few stops, but I would think a move above 110 is going to be hard to do on a sustained basis. So resistance 110, it's a big round number. It's not too far off of yesterday's highs. Support is going to be at 108. I know that's a wide range, but you know what? I think these ranges, this is the range you trade today, intraday. Intraday, you get a dip down to 108, you'd probably be a buyer. You get a move to 110, you probably want to be a seller. When I talk about moves down to 107 or a move up to 113, you're talking about a very big blowout number. Like we only created 80,000 jobs. Yeah, we're probably going up here. We created 290,000 jobs. Yeah, we're probably going down here. But realistically, economists, they make these estimates. It upside and downside surprises like that aren't normal. So what you're probably going to see is you're going to see, maybe us come in at 220, which might put us down here. You might put us, create 180,000 jobs, maybe 170,000 jobs, and that puts us up here. Because remember, the median's about 200,000. All right. So I think that this is more likely. This is less likely, but there's still possibilities, and you can see why I talk about them. All right. All right. So now let's go over to the and by the way, bearish bias has been obviously turned to neutral as of yesterday. Okay, big deal. Okay, all right, let's go over to the cable. Pound dollar, pound. And obviously most of the moves yesterday were euro related. The pound, but the pound did get a sizable move off support. This is something that I looked at yesterday. I drew this out yesterday afternoon. You guys hadn't seen this because it was late in the afternoon, and I was like, huh. Okay, what I was drawing is a descending wedge. Okay, you can see the descending wedge. We've got it's a rough one, but you guys might recall from several weeks back. Remember this false breakout right here? Do you guys remember that? We were monitoring this trend line. We were like, oh yeah, there's a trend line. Then we had this false breakout, and then we rolled over, and we're like, oh crap, this is going to bring in some serious selling, and it did. Then this is that right there is that was a Friday bad print at the end of the day after the FX market closed. But what you're seeing here is you're seeing a descending wedge, or pretty close to a descending wedge. What that also means is now any move up to like this 152 area is probably going to find some sellers. Okay, and here this is where I'd like to actually remove these fibs and actually redraw here and figure out where we're at. All right, so obviously we're stalled at the 618 retracement. Now this is pretty right here. This is a pretty good idea of where we're going to go if we can break the 151.70 level, because that's also a lot of horizontal resistance over here as well. You can see a lot of previous support over here. All this is all the same area basically, right? Here, let me just redraw that one time. See, if we break this, 151.70. I think that opens the door right immediately, like immediately to the 786, which will be right here. Let me grab. Okay, 152.40, but 151.70 I think is going to be a big resistance today. 151.70, that'll be a key level of resistance. Hold on. There we go. We're still in a range. I'd like to say we're still in a bearish trend, which we are. Because the euro had such an aggressive rally, that I'm just going to keep it on range for now. All right, because obviously that move in the dollar really disrupted all the strong bullish trends that we have now kind of pushed everything back into a range. Support on the pound. This is like the euro dollar, very minor pullbacks here. You can actually take it from the low right here. Okay, but really a 38% retracement will come in at 150.62. Was that 150, 59, 150.60? There's see all these hourly spikes over here too. See them, boom, boom. It's all around the 150.60 area. That should be some pretty good support today. You notice the range is much narrower in the cable. That's because the euro had such a big move yesterday, where the pound's just not as aggressive at the moment. Let's go over to the Swissy. Now, if you guys are just tuning in, I actually exited half of my Swiss position, so I'm down to a third size of what I had. I was like in a 2/3 size position. With Swissy, it hit me. I got out this morning at 99.90 out of that position. Right when we were here earlier this morning, I got up kind of early this morning because I am actually packing. I had a guys trip planned for this weekend. We've had it planned for the last month and a half. My wife is still recovering, but she's like, I think you can go, and so I decided last night that I'm going to go. So I will not be here on Monday. I'm flying out this afternoon after lunch money, and so because of that, I got up a little early this morning to pack and whatnot. But anyway, the reason why I mentioned that to you is that's why I was up early and I got out of partial of my Swiss position. It's unfortunate because that loss, it took from my gains. It took from my gains yesterday. Everything that I made in the euro dollar scalping yesterday and then some. Yeah, I was wiped out by that because it took out my positions that were taken up at these levels. Back here. Okay. All my positions that were taken over at these levels were taken off this morning. So unfortunately I took a loss, and like I said, it's frustrating because I had such a great day scalping yesterday, but it's all right. I still want to maintain some Swiss positions, and the reason why is if you guys haven't seen it, let me just show you really quick. Here's the 6S, okay? This is the Swiss futures. What you'll notice is we hit previous support, current resistance, and then we've come off, and that's also a big weekly trend line that we've been monitoring. Okay, we're just rejecting it, which is good. Which keeps me engaged in Swiss shorts. The only thing is I just wanted to minimize my position ahead of non-farm payroll, as you can understand why. So here is the dollar Swiss. The dollar Swiss actually hit a 50% retracement of the last move up, 50% retracement. That came in at 99 cents. We basically went through there, went to 98.70 something, 98.75, 74. That will be support today, obviously, if we get back down there. But I think we'll find support ahead of that, actually. Okay. But you can see the Swissy, it is also flagging, very similar to the euro dollar. I really think that 99 cents is going to be support for the Swissy at this point. any pullback to 99.10 right here, spike low, these lows, that's going to find some support. Resistance now on any rally, let's see here. We're going to take it from this spike high, and I got to get rid of some of this stuff. It's very messy at the moment. Let's remove that. We came through so many levels of support yesterday. It's amazing. The moves yesterday were just absolutely, you don't see moves like that all the time, obviously. That was a pretty big one. Okay, so 38% retracement is just overhead, but you'll notice the Swissy is actually holding up really well. So any move probably to the 50% retracement here. 50% retracement. I mean, the better resistance is way up here at 101 and change. I just don't think we're going to make our way up there today. We would have to be a really big blowout number to do that. I would probably monitor the 50% retracement and maybe even, you know what? Let me look at something else here really fast. This is in between fibs, but you can see how we really stopped there, and then that was support. Then on the way back up, it was resistance intraday. That comes in at 1.0040. I think that's probably going to be some pretty good resistance today for the Swissy. We went from bullish to back into a range environment. Okay, in the Swissy. I actually still think the Swissy's in breakout territory, just so you all know, like on a monthly and weekly basis. Here's the reason why. All these trend lines are still broken. We can come all the way down to like 98 cents, 97 cents, and still be in breakout territory. Okay, so I still think it's in breakout territory. The thing is we might be in a range bound environment for a while, so that's why I have to go back to range, especially with the way the dollar moved yesterday. Dollar yen. Now looky here. What support do we hold? $122.25. Boom. Held. So where's resistance now? On a good number, probably right back up here, right? Right up there. Right to there. If we stretch our legs, 123.25. Seems very logical. That's a 786 retracement, so 123.25. 123.25, and then support's going to be at 122.25 again. We are still in a big, fat, hairy range. All right, so when I come back, we're going to do the Canadian, the Kiwi, the Aussie, dollar index. So we'll get caught up. Obviously, we've got to be very careful doing analysis, or very thorough is the way I need to look at it. Be very thorough doing analysis, going through, getting ready for non-farm. So don't go anywhere. I'll be back in just a few moments. Thank you. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar, so let's go ahead and continue on. We got to get all this analysis done. So here's the dollar Canadian. Obviously, there's an OPEC meeting today. There's a lot of things that are containing the dollar Canadian, but it's interesting that with as much dollar weakness as we saw yesterday, dollar Canadian didn't sell off. So the same levels apply that have been around all week. They are just as important today. 134, 133. Okay, nothing's changed here, and that makes for analysis really easy. 133 and 134. Okay, we're in a range. All right, let's go into the QE. All right. Okay, here is the Kiwi. Sorry. Okay, so the Kiwi has the potential of the inverted head and shoulder pattern. Now, here's something that's very interesting about the New Zealand dollar. Okay, the New Zealand dollar has this inverted head and shoulder pattern that points to 67.50 roughly. Okay, that's where it goes to. We also have this downtrend line that comes into play right there. Now, what else is very notable here is your daily trend line. We've got a daily trend line that comes through. It's been capping us. That has been breached thus far. Now, obviously, like I said, today could be a game changer. You don't want to walk into today saying, "Oh, the Kiwi's breaking out. I'm getting long." Yeah, I mean, we could have a strong jobs report and the Kiwi be down 100 pips today. So, things can change, obviously, based on today, and we can end up having a false breakout. Those are both distinct possibilities on a day like today. So, with that being said, all right, I think that resistance today is going to be right here at the 67. If we rally, okay, it's going to be at 67.50 roughly, because that is our inverted head and shoulder pattern target. I say roughly because it's obviously that that we got, oh shoot, we have 67.20 that comes in right here. We have a trend line that comes into play. 67.20 to 50. Sorry, I have to give you a round number or a range, guys, because it's approaching some pretty key resistance here. 67.20 to 50. We are still in a range, although we're trying to break higher. Okay. Support. I mean, I hate to write down support down at 66 cents, but it held like a champ yesterday, right? And it's not too far away. It's only 80 pips away. I mean, like I said, a strong number could put us right back down at 66 cents without much of an issue. All right, and I hate ranges. You guys know how much I hate us being in a range, but hey, yesterday did it. If you want to blame somebody, blame Draghi. Don't blame me. Not my fault. It's Draghi's fault. All right. So here, what's interesting about the Aussie dollar. So the Aussie dollar has been working this downsloping trend line breakout for. I mean, we've been working on it for quite some time, and we have this downtrend line. We broke it. We've been kind of hovering around it. Trying to flag out of it. We had a strong retail sales number last night out of Australia. Nothing. I mean, we pushed us up into new highs. I was actually doing some Christmas stuff last night, but we pushed up to new highs and then false breakout. Almost a gravestone doji if that would have been red, but false breakout, long wick took us down. Man, but it's just very choppy. So I'm going to remove this, because now I think we have some specifics to pay attention to, okay? Now when I say specifics, I'm looking at wicks now, and let's remove this really quick, okay? These wicks here, very important support, okay? And obviously the overnight high is going to be very important resistance now for the Aussie, because the Aussie's trying to grind higher, but that false breakout, if I was a bull, that would worry me. That little false breakout last night. Now, we haven't started making a series of lower lows yet, so you're okay if you're bullish, but just start to be careful, I guess is the way I want to put it. All right, so support here is 72. The low would be 72.83, so 72.85. 72.85 is support, and then resistance is going to be the overnight high, which is, let's see, the overnight high is 73.48, so 73.50, right? 73.50. We are in a range. I know you hate it. I hate it too. All right, let's go into the, oh, what happened to my, hold on really quick. I don't know what happened to my dollar index. I must have deleted it on accident. So let me grab it for you. That's not what I wanted, but that's all right. All right, coming over. DXY. Here's the dollar index. Let's go over to, let's go to the 4-hour chart. Okay. So the 4-hour chart, we finally found support around the 38% retracement. All right. Previous resistance, you know, we overshot it a little bit. It is holding a support, but you know, you got to look at this now as, here, let's get rid of this. Actually, we'll get rid of this here. We're going to get rid of this. I'm going to try to make it easier on your eyes right now. All right. And actually, let's get rid of that. And let me do a horizontal ray from here. Okay. Okay, so this resistance, you can see it how we marched right up there. We stopped. See that support? It's now resistance. That comes in at 98. I'm going to say 98.50 is resistance. Significant too. Because if that breaks, you know it was a really good number, and then the euro is probably going to do a decent pullback. All right. We're in the range. Also, one other thing I need to note here about the dollar index. Obviously, you got to start looking at the potential of a double top. That's a big risk in the dollar. You know, double top just because it matched that high. One of the things that the dollar, you don't get so excited about a double top unless you break here. You break through 92.50, the dollar is going to get absolutely wrecked, in my opinion. Absolutely wrecked. It'll get destroyed. All right, but that's pretty far away. Okay, because a double top is not a double top until a neckline is taken out. The neckline is at 92.50. Period. End of story. Okay, but what we could be building here, this is another possibility, is when you have a situation like this where you have a, the highs are consistent, or you have like what would you think would be a double top, we may start building a wedge too. We can start building a wedge in the dollar index. That, I mean, it could look like this. It could look, different. I mean, it could look a lot of different ways. Okay, so don't get all worked up about, oh, there's a big double top. It's way too early. It's like looking at a head and shoulder pattern as you're trying to build the neckline. It's way too early. It's way too early to run out and say double top. But I will say that is resistance right now, and I will say that the lows are obviously support, and that comes in at 97.50. So 98.50 and 97.50 is also really key support. Okay. All right. Now let's take a quick look at the peso. And by the way, if you guys are asking questions today, you guys know on normal days I try to answer all the questions. I mean, that's just every day I try to get to everybody's question, everybody's comments, and any currency pair that you want to see. Yesterday, obviously, it wasn't happening. There was, when you have a 500 pip movement, there's no way I'm going to be able to address everybody's questions. And today on non-farm payroll, same thing. So if you guys are asking questions, I'm not ignoring you. I never do. It's just, obviously we have non-farm payroll. It's going to be busy. All right, so take a look at the peso. Now, here is a long-term chart of the peso. You tell me. I'm going to look at your questions or answers right now. Does the peso look bullish or bearish right now? Looking at that chart, what do you think? Bullish or bearish? I think it looks extremely bullish. I mean, we held this long-term trend line. We have this wedge, which is now is a continuation pattern, break higher. It went up when the euro went down yesterday. I mean, if you're short, if you're long Mexican pesos right now, which I know, some people are, you're probably crapping your pants. Right now there's, you're looking at the peso going, holy crap, what happened here? Why is this happening? If we continue to see risk aversion, I don't see this stopping. Okay. It's extremely bullish. And while it's above 1650, there's no reason to be bearish. Okay. So anyway, where is resistance will be key. So let's figure that out. I'm sure the peso surprised many yesterday, but a lot of people will never talk about those positions because they are so surprised. I was looking at it saying, I was surprised. I was going, oh my God, I can't believe the peso is ripping right now. And I'm sure a lot of people that are short the US dollar Mexican peso are thinking the exact same thing. And the problem is if you have a blowout jobs number, and I mean, we could seriously be way up here at 1690. Now, I don't know what to do with the peso right now, but I think any dip now down to 1665, you're going to find buyers, right? So that's support, 1665. Resistance, 1681. All these spikes up here. 1682, it's a 786 retracement, so, I'll write 1682 right now. It's bullish. I mean, you look around, everything else went back into a range. The peso continuing its bullish trend. Amazing, huh? It is. All right. Let's go to the euro's back above 109, guys. I'm glad I got out of that. I don't even want anything to do with it today. And I scalped the crap out of that thing yesterday. I had such a great day scalping that. US dollar, Norwegian krone. Hey, and by the way, I want to ask you guys this. How'd you guys do yesterday? Okay. Trading wise. How did you guys do? Did you guys make some money? Were you caught? I mean, hopefully you just were not caught. My biggest hope about yesterday is that you were not caught short the euro dollar yesterday. That's what I hope, because there was a lot of sell side analysis yesterday telling people to be short the euro and it's going to drop quite aggressively. So, but hey, as long as you weren't stuck short the euro, I feel good about that. So yeah, so Joe, like this is this is not a lot of people's answers, but this is an answer that's acceptable. Like I lost $200, but could have been much worse. Yeah, I mean, hey, when you have a really really crazy day like that, don't if you ever walk away and you lost a little bit on a crazy day, it's okay, believe me, because it could have been much much worse. And if you had a great day, great. And if you have a bad day, it's typical. It's typical to have a bad day on major volatility days like that. It tends to be. Okay. If you had a great day, awesome. And if you lost a little bit, and don't beat yourself up, because when you have big days that move like that, they can end up being really 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 career ending. Those types of moves, they can be career ending. All right, so I've seen it happen a lot of occasions. All right, so here's the Norwegian krona. We're sitting on a 38% retracement. I'm not going to write down the Norwegian krona. Well, you know what? I think I should, actually. I think I should. Yeah, like I said, and for me, losing a little bit of money yesterday, I mean, it's frustrating, but man, it could have been a lot worse. A lot worse. Okay. All right, 860, and see, this is flagging too. So, I mean, this basically, it's trying to magnetize it. It basically looks like that. That's why. Let me just delete that one. So it's basically flagging like that. Or if I just undo that, something like this. Okay. If we break through the support, that's why you have to pay attention to this. 846, 845, 846. And keep in mind, this will move gold spiking higher. Yeah, it's just some positioning ahead of NFP. This is going to be more as a result of OPEC, I think, than anything. 860, 845. Here, that's what I'm going to write. Okay, US dollar, Norwegian krona. 8.45, 8.60 range. But also, don't forget to look at the long-term charts of the Norwegian krona. I mean, it may be coming down a little bit right now, but we're in a pretty bullish trend. Okay, you think it's going to roll over and then right back up again. Think it's going to roll over and right back up again. You think it's going to roll over and right back up again. So let's keep in mind what's happening longer term. U.S. dollar, Swedish krona. Rejected from our triangle. We've had this, I don't know how long we've had this drawn out on the Swedish krona, but I want to say about 2 months we've had this drawn out. I want to say it's about since like August or so that we've had these red lines drawn. Because I had it drawn from September and I haven't even touched them, but we've had them for a long time. So we're still flagging here. So it's the same as Norwegian krona. The levels are not as clean, I don't think. Hold on. Yeah, it's not as clean. Oh yeah. Oh no, look, this is a 50% retracement. Okay, so here, this is I will write this down too. It's just the same thing as the Norwegian krona. So 844, 860. Wow. When does that happen? 8.44, 860. Look at that. Swedish krona, Norwegian krona, trading basically 1-for-1 right now. Yeah, gold spiking up ahead of it's just positioning, guys. All right. With that being said, your bias chart is done. I will be back in about 6 or 7 minutes, and we're going to go into live analysis of non-farm payroll. So if your hands are getting sweaty, that means your positions are too big. FYI. Hey, I speak the truth. Your hands are sweaty, your positions are too big. Be right back.